Okay, as you can see here, we have placed an order to sell 4 contracts at 13.1775. You can see our indication on the chart right there. It has been triggered just a couple of minutes ago. I put the order in, haven't been filled yet. So I'm just going to start the video here. I'm going to pause it and then we'll see if we get filled in a few minutes. Okay, just a few minutes later we did get filled, and we are now short 4 contracts at 13.1775. You can see that our initial protective buy stop is at 13.1925, and that we have 4 buy limit orders in there, as you can see. The first buy limit order is for 2 contracts at 13.17 even. That's our first objective, where we will exit 1/2 of our position of course being 4 contracts. Our second objective is at 13.1625, which is a 6-tick objective, and I have placed the final objective down there at 13.1475. So hopefully this market will sell off. That's what we're anticipating, and if it does hit 13.17, that's our first objective, our stop will then be lowered. Our risk will be lowered from 6 ticks down to 3. Right now our protective buy stop is at 13.1925, which is 6-tick risk per contract. So if it hits 13.17 even, we'll drop it down to 13.1850 and just have a 3-tick risk equivalent to our first objective. So we're just going to monitor this here for a little bit and see how we get along. We don't like to leave trades in for more than about 10 minutes if we don't hit our first objective. So, we like to give the trades a little bit of time to work, some time for that prevailing intraday sentiment to take place. As you can see on the timeline at the bottom, I'm on Pacific time, so this trade was entered around 10:45 Eastern time, and it's just a tick now from our first objective, so hopefully we can reach that first objective here shortly. And if it does hit down to 13.17, you will see the stop immediately drop. It's a feature within NinjaTrader, and that's the charting program that we are using and which our software is compatible with. Our software is an add-on to NinjaTrader. And so NinjaTrader, obviously, they offer not just the charting, but the trading platform itself, and that of course works with, it's interfaced with your broker, so that you can actually place trades all right on the chart, as I am doing here today. You can also use the dome or the ladder, and that's just another way to go ahead and place your trades. Okay, we just hit our first objective, and even though we haven't yet been filled, you can see our stop has been reduced. Our buy stop is now at 13.18.5. So if we don't get filled here and the market turns around and rallies on us, in other words, moves against our short trade at 17.75, then we would lose 3 ticks on our full position, which is 1/2 of the initial risk that we were prepared to take when putting on this trade. But hopefully it will come down. It's have a bit of a bounce here, but hopefully it will come down and hit our 13.17 and actually get us filled. So that's what we're hoping for at the moment. So we'll just watch the trade, see how it unfolds. By the way, this trade, you can see our red filter at the bottom. That band of color at the bottom indicates that our intraday bias is down, and of course we want to take trades with our intraday bias. There are occasions when we'll go ahead and take a trade against the intraday bias, as long as our intraday bias and a barrier is known. In this case today, our intraday bias is down and we have a red filter. We're not butted up against, well, we actually are fairly close to a known resistance area, and that was the 1318, 1319 area that we had going into today. The market did trade above it. As you can see, the early low was at 1318 even, and then the market rallied from there up to just above 1322. Okay, we just got filled on our first objective. You see our stop is not changed. It'll stay right there until we hit the second objective. We just hit the second objective right there at 1316.25. Our stop was adjusted, and so and we were filled too on that trade almost right away. So our stop, as a result, has come down and reached our entry price for our final partial position. You can see that we just have one contract left on this trade. So when we sold 4 contracts, we've now bought 3 of them back, bought 2 of them back for a 3-tick profit each, and 1 of them back for a 6-tick profit. So we have a 6-tick plus 6-tick, so we have a total of 12-tick profit, which is 3 points. So we've made $150 on this trade, and we've locked that in by placing a buy stop at our entry price on our final partial. So that final partial position, which is 1 contract, if the market should rally right now and hit 1775, which is our entry price, we'll break even on the final contract, and we'll just have the profits on the first 3 contracts. So I have placed this particular buy limit down there at 1475. The way the automated trade management feature works within Ninja is that you do have to place an objective for all of the contracts that you have in play in order to activate their automated trade management tool. So that's what I've done here, and on this particular scenario, I've gone ahead and placed a 3-point profit objective on the final partial. We'll just wait here a moment and see what sort of action we get out of this. If we can get a selling paint bar, which is how we will often manage our final 1/4 position, we will make an adjustment accordingly. Because we are short, if the software produces a selling paint bar, then we will adjust our predictive. Now that we've reached our first and second objective, if the market does form a selling paint bar, then we will adjust our stop at the close of that bar to 2 ticks above the high of that selling paint bar. So we actually, our preferred management technique on the final 1/4 position is to do it manually and to give the market some fairly good room to move, and also to make our stop adjustments according to the market's activity and the structure within the market, as opposed to just a particular number like a 6-tick trailing stop or something like that. So we'll just monitor it here and see what we can get out of this out of the market here, and see if it's got some more seller strength in it to push it down. Now the market, of course, this is we're recording this on Tuesday morning, May 24th, 2011, and the market had a good down move yesterday, but did not have a lot of follow-through. But we still felt that as long as the market could hold below the 1318, 1319 area, it would have a bearish tone to it. The early open was slightly above that barrier. It opened at 1950, dipped to 18, as you can see, and then rallied up to 22, but sold off from there in a fairly strong fashion, and that's why we've gone ahead and entered this short trade with the day bias, which has been confirmed now that the market has stayed below that 13, 18, 13, 19 barrier, and has produced for us on an intraday basis a bearish bias, and that's why we've got the red filter showing at the bottom. So that filter is actually produced from the market itself, from our structure. It's not from any moving averages or anything like that. It's taking a look at our structure within the day time frame to try and make an assessment as to whether or not the market really has a bearish or bullish intraday bias to it. And so that's one of our key components in our 2 out of 3 formula to really make a decision as to whether or not we want to go and take any particular one trade that is set up for us, because the software is fairly sensitive to the intraday auction process. So it defines this auction process in a very sort of sensitive way, and as a result it will actually produce more trades than we actually want to take. Better to have it too sensitive than not sensitive enough. So we actually go ahead then and make a decision as to what we want to do as far as the actual selection, if you will, of any one of these particular trades. So we like to think of our software more as an intelligent assistant as opposed to, a trading system per se. It does produce trades in a systematic manner that require that have to meet certain requirements in order for that trade to actually be set up. So we do have the selling blue bar here, as you can see. So what I'm going to do is just cancel this automated trade management feature. I'm now going to manage this trade in a manual sense. So the high of that bar is at 16.50. So I will place a protective buy stop for the final contract 2 ticks above the high of that selling blue bar, as I was mentioning earlier. So we're going to have our protective buy stop in at 13.17 even. If the market should bounce here a little bit and stop us out at 17 even, looks like it might just do that here. Then we will have a profit of locked-in profit of 3 ticks on the final partial. So that's really what we're looking at here if that should unfold shortly. Looks like it might. It's just 1 tick away from potentially stopping us out here. So, but that'll lock in the 12 ticks that I was mentioning earlier, and then 3 here. That would be 15 ticks. So 16 ticks, for example, would be 4 points, which is $200. So it's 1 tick shy of $200. So that would be $187.50 would be our net profit on this trade should we actually get stopped out at the 17 here. So and that's for 4 contracts. Of course, you've got to include your cost of commission, which is usually runs $4 and change usually. Okay, there we just got stopped out at 13.17. So there's just an example of one of the eminidaytrader trades, a short trade from Tuesday, May 24th, 2011. Any questions or comments, just let us know, and thanks for watching.